Now, the wild
Thank
swings
you.
on the US stocks took place in a pivotal 24-hour period. There were strong results. NVIDIA, of course, starts the whole thing off. A delayed September jobs report came in better than expected. Please, Jonathan Corpina, who manages the trading desk at Meridian Equity. Good to see you, sir. It's been way too long since you and I have chewed over the markets. But Jonathan, please tell me, why is the market unhappy today? What drove it down?
Yeah, Richard, nice to speak to you too. I think there's a couple of things that are going on here. I think from a high level, big picture thing, if you look at where we are from the April lows to where we are now, market has moved, has had a very significant move to the upside, up close to 40% off those lows. Where the market looks for excuses to take some profits off the table, it looks for excuses for that catalyst to make some sales, right? So we still have the same headwinds that we've had in the market. We continue to talk about interest rates. We have our geopolitical risks and concerns that are out there. We've got our trade wars that continue to those conversations. So I think overall, the news that we've received yesterday and today, as be it good news, but not overwhelming news, right, for our markets. I think investors are looking for opportunities as we're getting closer to the end of the year, as we're getting closer to the holiday season, to take some profits off the table. Unfortunately, what happens is when it does happen, like we saw today, it moves fast and it moves hard. We were trading up, everything was fine this morning. S&P futures, we opened high, we were up significant, plus 1 to 2% across indices, and then it switched very quickly. And when it switches, it rolls and it rolls very fast. So we saw that today. Overall, I think our economy is fine. Our economy is strong. Our outlook is strong. Right. It's just our markets are very fragile.
But what I've never really understood, even after all these years of covering this stuff, is you talk about the switch turned or the switch was flipped. I never understand what flips it. And then once it flips, how it starts to feed on itself. Is it human driven, do you think? Is it algorithmically driven? What flips the switch?
I think what happened today is a combination of both. There was some talk going around about the Fed's next interest rate move, and prior to today, the thought and the betting on that, the expectations of that was it was very high that the Fed was going to cut rates at their next meeting. After what we've seen and after activity we've seen over the past few trading sessions, it seems now that the Fed might use this as an opportunity to pivot away from a cut and to keep rates unchanged for now. I think that concept is what changed our market. And what happens is when that headline comes out, whether it's coming from a major headline or whether it's coming from a tweet, there are some algorithms that see that and start to trade off of that, put some sell signals into the market. And as I said before, it's a snowball effect, right? It moves very quickly, and then the humans do get involved in it.
Right, but today, did we actually see selling or did we see marking down?
I think we didn't see panic selling. What we did see was lack of participation, right? We saw the buyers in the market who were there this morning get a little edgy and pull away. And once you get that support pulling away, and you do have some sells, you don't need a tremendous amount to move the market when one side of the market isn't there.
If you were on Wall Street or in the bars in the evening afterwards, and the discussion turned into whether this market, Nasdaq Tech, is a bubble, what would be the consensus over a pint?
I don't know if it's a bubble at this point. Let's just kind of look where we are today. Going into today, S&P was up 14%. Yes, we've had a big move from those April lows to now. But I don't think overall it's a bubble. I think our economy is moving in the right direction. Our interest rates is moving in the right directions. Our job markets are getting stronger. I think people are feeling more comfortable with where we are right now. Yes, do we get lofty levels when we get some AI headlines that move our markets higher? Yes, and that's the breadth of our market. That's what moves it back and forth. But I don't think we're trading at these such inflated levels where there's a bubble that's going to burst. The AI concept, the AI companies, the outreach of AI into other sectors, it's here. This is what's going to be the new norm moving forward. To me, that's not a bubble.
And I'm grateful to you, sir, for taking time tonight. It's 4:38. Get yourself off home. You've had a long day. The day is finished.
Thank you, sir.
Thank you, sir.